European leaders finally come up with a plan after muddling through its sovereign debt crisis for almost 2 years. Gold prices stalling out here. Now, David, gold has rallied 7% over the last 4 trading sessions, but the fact that it's not suffering a big sell-off today, does that tell you that investors think the worst isn't over for Europe and they still want to keep that gold safe haven exposure?
Yeah, I think that, Alex, you're seeing obviously currency debasement. There's kind of a rush to who can devalue their currency faster than the other. You're going to see some fallout from that in the next several months. So gold is still going to be treated as an alternative currency, and it's unlikely to see much downside from here, maybe very minor.
Okay, great you pointed that out, because last time we spoke you had a forecast of gold kind of hitting the 1705, 1725 level, then seeing a big correction for about 7 to 8 months, regrouping come April, and then a 2-year rally. Have you revised that forecast?
I think what we saw this week was a rally into the resistance zone I talked about 3 weeks ago, and we hit 1728. That's right on the spot. I think we will consolidate here, but I am changing my intermediate views now based on the action I'm seeing, and obviously we've had some new information out of Europe. So I think what we will see near term is a rally up into the 1775 area, a little bit of consolidation, and then I think we move up into the 1800s.
And then what about that $2,300 price target that you were kind of looking for over the next 2 years? Is that still in the cards, or are we going to have some kind of correction in the medium term before we hit that level?
And that's absolutely in the cards. That would be like my price objective for the top of what I would call a fifth wave pattern. It could go higher than that.
So then what does your revised forecast signal? Does it signal lack of confidence in the Eurozone to kind of get its act together, or that it will sort of move in tandem with equities that we have been seeing over the last few weeks?
Well, there's absolutely a huge debt problem that's still not solved overseas in Europe. The banks are probably ring-fenced a bit for now, but you really can't put out a fire with more paper. You can maybe smother it and have a little smoke for a while. So I think we're getting a little smoke and slowing the fire down, but eventually this is going to flame back up again, probably come early next spring, late winter. And gold is still going to be the go-to place for currency alternatives, in my opinion.
Now, even though we haven't seen any money printing out of the European Central Bank, do you think that the leverage of the bailout fund is enough to sort of devalue the euro longer term that will push gold prices higher? Or do you think we will see money printing?
Well, I think you'll see a little bit of both. There'll be some money printing in one form or another.
And my last quick question is, what if we see equities, though, rally from here? Will that sort of drag on gold, or can they move together?
No, I believe they will move together. I believe you will see gold reattacking the $1,900 highs within the next few months.
All right, thanks, David. I appreciate it. So gold going to move higher. Thanks so much.